Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, I'm going to cover the next medium-term swing trading strategy. Well, this one's medium-term, the last one was long-term. This particular strategy presents a lot more opportunities, or at the very least, trades don't go for anywhere near as long as the previous strategy. So I'm going to call this one a medium-term swing trading strategy. And this one has been developed with the Solana ticker. And I discovered this one a bit more recently and have been trading using this strategy since probably around July, I would say. But like any swing trading strategy, I did quite a bit of back testing before starting to really get into using it. So unlike the last video, I will actually keep this one much shorter. So let's get straight into it. So first things first, just so you all know, not financial advice, of course. So here we are on the 2-hour Solana chart. So this strategy I've been using since, let me just quickly scroll back so I can quickly have a look. So it was actually around, July where I found this particular strategy and have been using it since. And I'll quickly just cover the indicators used in the strategy first. I'm using the triple EMA forecast, but you can actually use any triple EMA, I would say, for this, because you don't really need the forecast. You don't really care where the EMAs are going to be necessarily, and it doesn't always get it right anyway. I mean, look at this. It's doing this weird bend down thing. I don't think that's going to happen. I think the actual forecast would be here, but that could be because I've got linear regression turned on. So if it was flat, I think that's probably more accurate. Anyway, so you can use any EMA, triple EMA for this. So the main ones you want are the 21, the 50, and the 200. And the main one in this would be the 21, and then the 50 is also good, and then the 200 is another solid one. And I also got on the TMO overlay, which I had in the last one too. I pretty much put it on everything because I like to see where the 3-line strikes are and where the smooth moving averages are. That's just this one here. So I had that in the last video too. So I highly recommend popping that one on there too, because that's part of the strategy, because a big part of this is retests of the 21 smooth moving average. But in this case, sometimes it doesn't quite get there because we're dealing with a 2-hour chart, and sometimes it doesn't quite get to the smooth moving average, but it gets to the normal EMA. So basically, for example, here, if you had on the 21 smooth moving average, then it wouldn't have got you into the position. Whereas the 21 EMA, it got you into the position. So let me just quickly go over the rest of the indicators. So the Bollinger Bands buy and sell. So I've had this on previous charts in previous videos, and I really like this also on the weekly to tell me if we're in a bull or a bear market. For example, you can see it does show you very well what kind of market we're in. Let's just go to the index of Bitcoin. There was a bit of a fake out there, so that kind of thing can happen. But if we have a look at the Ethereum index, that's a bit more messy. Bitcoin's probably the better one to look at. But if you were looking at this on January 10, then that's when you knew that we're in the bear market. If you were to look at this in May of 2020, that's when you know we're in the bull market, right? So bear market, bull market. So that's what I've used this for in the past for market analysis videos, but I'm actually using this for swing trading also. So to get this up, you just basically go into your indicators, type in BB_buy, and that's what will come up there. There it is, Kryptolytix. There's that name again. The last strategy had Kryptolytix as well. It's just BB_buy, and that's the Bollinger Bands buy and sell. And the other thing I've got on here is the average true range by Sylvain Vervoet. All right, so, or Sylvain, sorry. Anyway, so basically you just type in average true range into the indicators section, and it's one by H Potter. Basically just look at the one with the most number of favorites essentially. And this is just to give some sort of indication as to where maybe you could put your stop loss, but be wary because sometimes these levels get hunted, so you have to put it a little bit below that. And also often on the flips, you don't actually have a stop loss for a while the trend develops. So this is just kind of for reference, I suppose. I wouldn't use it or take it as gospel, I suppose, but it's just something that's kind of nice to have. So getting to this many indicators on the chart, you have to have the Pro version of Tradingview. If you don't have Pro version of Tradingview and you're looking at getting it, there's a link in the description below for a discount on Tradingview, so check that out. You're basically just using it to try and work out where to put your stop loss. So this is what the chart looks like. I've changed the colors of my EMAs from the stock ones to colors that I like to look at. There's tealy green, blue, and purple. And these are your entry points, essentially. So basically what you're doing is you're waiting for the flip. So for example, here where it said buy, and you are waiting for a retest of one of the closest moving averages, and that's where you enter your position. So you can see that there are going to be losses. Like this was pretty bad, to be honest. So this is the sort of thing that can happen. But if you are in this short, you got in here. You didn't get in there, but you actually would have put your short in there, right? And your stop loss would have been just above here on this. But when you saw buy, then what you're doing is you're waiting for that retest, leaving your stop loss there just in case things get out of hand and just start running against you as it did here. But you flipped position there. So if we have a look here, between the entry on the short and the flip was 1%. So 1% loss. It's not too bad. It's not too bad. If we keep going back here, I'll just quickly show some more back testing here, because as I said, I've been using this for a while. There have been times where it gets a bit choppy, and overall, from what I can see from this strategy is I'm definitely up more than I am down. So I have a separate account for this strategy. So I have a Mango Markets account that I use for this. That way I know that it's completely isolated. Actually, all my swing trading strategies are isolated in their own sub accounts. So I can check the performance. And if I can see that over the period of a few months, that overall I am more up than down, then I know it's a successful strategy, right? Whereas if you've got all these different strategies going in the one account, it makes it really hard to work out if it's a good strategy or not. So we'll just have a look at the most recent trade. This one here kind of came out of nowhere. I was not expecting this, but basically, as you can see here, this one, it flipped while I was asleep, so I didn't quite see that. I did have a stop loss in here, which triggered, but I did not flip the trade because I was asleep at 4 a.m., which I think is kind of fair enough. But I got into this trade, this short trade here. I had a entry here on the 21 for short, and I also had an entry here. So for a brief period of time, I was underwater, had my stop loss up here in this average true range on the 2 hour again. That was pretty good. The thing about this particular trading strategy is, in terms of profit points and where to take profit, this is probably where it's good to look at other things to try and work out where your exits should be. So for example, I'll just reveal all my drawings on this chart. So we can see here, I've got a lot of stuff on here. So for example, on this short, I took a large amount of profit on this trend line. So I linked this wick to this wick, and that's going all the way out here, and took a large portion of the trade off here and at this 3-line strike. So overall, that was about 5% move on that. And then I left a small amount until the flip, which occurred again while I was asleep, but that's okay because I was just going to wait for the retest anyway. So there was actually a trend line retest here, and this is just a trend line going from here to here. So I got into a small portion on this trend line here, about a third of the trade size, and then the rest I got in here. But I'm kind of lucky that I didn't put my stop loss. There's no average true range stop loss, so I just put it at the bottom of this candle here. So it's a big momentum candle on the 2 hour. So that could be considered as like a fair value gap essentially. So these big candles can sometimes get filled. So I put my stop loss just below here. So you can see here, I use these long and short tools on my chart to work out basically where my break even is. And for example, if I've laddered into a position, that way I can see what my average open is or my break even, and I can just put that in here, for example. But I'm just going to hide these lines just so we can see the indicators basically and how they have worked in the past. So that's basically the strategy. So these are the indicators. All of the settings are stock. So I have actually on the TMA overlay hidden the 50 and the 100. However, just looking now, I feel like these are actually better than the EMA. Let me have a quick look here. Let's just hide this and change this up to colors that I like. So 50, I like to put the 50 on this blue and 100 purple. And then I have to click here and show the 100 line. Okay, so if I use this instead, say for example, on this short, much better position here. So you get in here on the 50 and then the 21, those are your laddered positions essentially from this flip. So if you are getting in, and just don't worry too much about the 100. The 100 could be a good profit taking smooth moving average, but I wouldn't really trade off of it in terms of opening new positions. But yeah, so laddering in here on the 50 and here on the 21 gets you to a pretty good position for this short. And then as you can see, the entire move down, if you did take profit along the way, was about 8%. You could do, for example, like I do with the other strategies, some of them I've got with the day trading strategies, every 1% move, taking a quarter of the trade off. Maybe you could do every 2% and then leave the last quarter just run until the flip, for example. So I guess in this case, it would have been, that would have been your average open, 2% was there, 4% was there, 6% was there, and then the flip was right here. So buy, retest of the 21 for this particular trade. Unfortunately, this was a loss. And if you were awake for the flip, it was a -2%. Or if you just left it go, I mean, this is not great. I'd prefer to just be stopped out in some circumstances, and this is definitely one of them. So I had the stop loss at the bottom of this candle. That obviously kicked me out of my position there. And then I went short here. And I guess it would have been nice if I was using this smooth moving average and then just front ran it a bit, because that would have got me into a slightly better position here. So if you're doing half, that's 2%. The halfway point is there. At the maximum point of this particular trade, I mean, you did get this crazy move here, which was from the FOMC meeting. And if you had your stop loss there, here, for example, yeah, you would have been definitely stopped out of this trade. I was stopped out on this wick because I had my stop loss right here at the top of this little range here, this little swing, but I had already taken quite a bit of profit, so it was still a winning trade, thankfully. So my average open position was right here at the 21. Would have been cooler if it was here, but it wasn't. I'm just going to periodically turn all this stuff on and off. The other thing, the other places that are good to take profit are Fibonacci levels. So for example, if you drop a fib on this particular range here, so let me just hide this stuff again. So a good Fibonacci draw up would be from this candle close, or this wick down here to this wick here. So then you have all these levels in between of where price will highly likely reverse or reject from, basically. Like right now in this long, you know, we're on the 200 period smooth moving average. So to be perfectly honest with you, I've actually taken a big chunk of profit off this trade because it did go pretty wildly against me. And so I'm thinking, yeah, it's definitely a good idea to take profit on this now, because I don't know how long this move will last. This could just be an impulse back up before we start to continue trending lower. But I'm in the long now, and the thing about these particular trading strategies is they're mechanical. you don't let your biases on the market affect what you do or what position you take. You're letting the indicators tell you when to get in, or the strategy to tell you when to get in, basically, and then writing it there. And if you have biases on the market, then take it to your day trading strategy account, essentially. That's pretty much how this works. So you can see there's been some times where trades have been pretty average. Just to solidify the strategy, we have the sell here, right? You don't get in immediately, you start to ladder in, or you just enter your entire position with the smooth moving averages on the TMA overlay indicator. So your first buy-in point would have been, and again, with some of these smooth moving averages, you might need to front run them a little bit. I especially need to on the Mango markets because it's more illiquid, but regardless, that was potentially the first entry. If it wasn't, then it was there. And that was the second entry there to basically build your whole position. It's not much of a difference between those. It's about 0.7% essentially between these. Once you're in here, you look for things like maybe horizontal support and resistance, or Fibonacci's to take profit, or even things like trend lines. So for example, there's a trend line from here to here. That was a good profit point because there's a good chance that things will reverse there. Maybe we get a little fake out down below and we come back up, for example, which is exactly what happened in this case. So as you can see, I put little boxes of where I actually entered, because I tend to use my charts also to document my trades as well. So I can see, what I did in the past, how can I improve upon the strategy, so on and so forth. So let's have a quick look at the past and see how things panned out for this strategy in the past. But yeah, just quickly, you can see this Fibonacci that I've drawn up from here to the top there. So in this particular short, you would basically take profit at the 618 and the 786. Yeah, and then maybe at this trend line here, and then have a little tiny bit riding up to the flip, essentially. So those are the best points to take profit on this strategy, but also smooth moving averages are a good place as well to take profit on. But a lot of the time you don't get them because you're above or below them a lot of the time. So that's one thing to consider. So yeah, this one's a bit more hands-on than the last trading strategy, because it does kind of rely on you to go and draw Fibonacci's, go and draw trend lines and all that sort of stuff to try and work out where good profit points will be. So that's something to consider, is that this one is a bit more hands-on, but you can see there are some pretty good trades in. So for example, here, this was a short from the top, which was really nice. So you had the sell point. So the idea is you're going to get a few losing trades because it is shorter term basically, but in the long run, your wins will outperform compared to your losses. That's kind of how a lot of trading strategies should work, is that you should get significantly more wins versus losses, or the wins should be greater than the losses. And I can confirm, at least based on the amount of time that I've been using this strategy, the wins have well and truly outperformed the losses. So yeah, you will give a little back from time to time, but overall, if you do follow this correctly, you should be up overall. So here's a really good short where if we just measure from the buy to the sell, or the sell to the buy because it was a short, we're looking at a 23% move, right? But if you measure from the moving average to, and you would have taken some profit along the way, obviously, like especially the 200 period moving average, or even the Fibonacci 618, or even the 0.5 Fibonacci measured all the way back over here, then, and also 3-line strikes in the opposite direction potentially, but then yeah, you would have probably been a bit more aggressive with your profit taking around here. But something like a 3-line strike off of a 200 period could be a re-entry if you did take profit here. So if you took some profit here, then maybe re-entered here. Again, 3-line strikes off of significant levels are very powerful, essentially. If they're in the middle of nowhere, they don't really mean much. Like for example, here, kind of in the middle of nowhere. Here's kind of in the middle of nowhere. Here's kind of in the middle of nowhere sort of deal, but off of moving averages, well, in this case, it didn't quite pan out, but I guess things were recovering a little bit here. But again, we've got a 3-line strike off of the 21 sell. I mean, this would have been where you had your short position in, unless you did put it on the 50, in which case you would have been there and there. In my case, I got in on the 21, and I got in the entire position on the 21, and yep, that was pretty nice essentially. And then the trade flipped there, and then there was a long here. So there's the buy, the retest of the 21s here, and then I had a stop loss in here. As you can see, it looked like it stopped out right there. And then basically there was the short. So this was a big FOMC meeting again, I believe, or something like that. There was some sort of Fed related news thing that came out. So let me just hide the drawings again. So short was there, and then there was no real points to take profit. At least there were no moving averages below. So that's when you have to draw up your horizontal supports and resistances and try and work out where price could bounce from. But in this case, I didn't really have many to work from. So I just basically took bits of profit along the way. And then especially here at this 3-line strike, it's where I closed a big portion of this trade. But from entry to majority of exit was about 16%. Pretty nice. So here was an example of a failed long, and here's where I put the average true range stop loss like right there, and that didn't stop me out. But so I went long here, and then had my stop loss at the average true range just here. That was just a little bit below it. It didn't stop me out, but it gave me strong consideration to close. So I did actually end up closing my position here on this 21 period moving average, because we did get an average true range flip. So I was a little bit concerned, I guess, at this stage that things were looking a little bit bearish, I suppose. And then especially this 3-line strike I saw, and I was like, I'm not so sure about this. So I went long there. I pretty much closed most of the position. I did leave a little bit run, but I pretty much closed most of the position at like maybe like a 1% or thereabouts. And then there was the sell there. I waited for the retest right there and didn't really get out of this position. I just kind of waited and nothing really happened. And then basically there was the buy was there. And so I went long right here on the 21. And even if you miss that, it's not a big deal, because we're entering kind of consolidation where we're like squeezing between a couple of moving averages. And then you would have got in long there anyway, or even if you left your buy order there, well, you would have got in there. And in this case, I was a bit more aggressive with my profit taking, took profit at the 50, and with the triple EMAs, which was this one. Yep, looks like the 100 period is exactly the same, and then took a large amount of profit here at this 3-line strike. So basically, you know, it's not a lot, but so the first profit point was here at 1.17%. It's not a great deal, is it? Then at 6.16, and then I took some more at this 3-line strike, 3.56, and then this just completely flipped down. See this one coming because I was asleep. It's the moral of the story is don't sleep, maybe, I don't really know. So anyway, I did take this short, as I mentioned before, but then I just waited because I was like, we'll see what happens. I had my stop loss up here. I had my stop loss around here, sorry, just above the average true range. And I just waited and then basically flipped there and then went long. That went long all the way up, basically. And again, just taking profit at the moving averages, 3%, then a 9%, especially at this 3-line strike. And then just held on. Could have actually re-entered here at this 3-line strike off of the 21, but I was not that sold on this move. And then basically there was this big pump up here, and so I took more off the table here at the 15.29. I think at this stage there was not a great deal left in the trade, so I just kind of held the rest on. And then here we go, a failure to hold the 200 essentially. So you got 2 candles completely running past both of these moving averages, very high momentum, and then took pretty much the last of the trade here out, and then just waited for the flip. Flip was there, and then that was the next position. So you can see that there are definitely some losses, like for example here, short was there, and then for example here, so there was a long trade here at the 21 after the buy signal, you know, taking profit here at 1%, taking profit along the way essentially. And I'm pretty sure I had some like Fibonacci levels in here to kind of work out where to take profit here, but I didn't actually take this trade here. And I think it was because, again, there was some news, some FOMC meeting or something like this. Again, always the crazy stuff, always the craziest moves happen around these Fed meetings and all that sort of stuff. So I didn't trade this particular sell. So I was kind of lucky that I didn't do that because that was pretty bad. But again, from open to close was a 5% loss. It's not terrible, but it is what it is. So then basically there's your 21 period smooth moving average retest here. There's your 3-line strike to, again, consider closing a large portion of your trade. If you just bought it immediately, then there was a 3-line strike there, and then a retest would have been your re-entry. But again, that's not part of the strategy, so I'm not going to recommend that. So here we go, another instance of a trade here. Sell, retest, down, profit point would have been there, and there, and then 3-line strike, which was again the 200 period moving average, so on and so forth. So I think you get the idea now. So if you just look back, you can see that there are some really good trade opportunities using this particular strategy. Sometimes you do miss out on good entries. For example, here, it didn't really retest down here, but you are at the 50. So maybe it's worth, when you get to some circumstances like this, where it's a big bullish candle and it's holding at the 50, if you want, maybe enter half of your trade, because then this sort of thing can happen. That's like 6% to the profit point. And then you can re-enter here at the 21. Again, sometimes you have to front run these moving averages, because if you have a look, you don't always touch them. So just bear that in mind, that sometimes you've got to front run the moving averages. I personally have to, because Mango Markets is not as liquid as, say, something like Binance or FTX or Bybit or whatever. So I have to front run the moving averages personally. But where did I get in on this one? Okay, back here is where I was using the 1 hour. So that's why it looks the way it does. So I was using the 1 hour for a while, back in July. That's where I first discovered this strategy. But then I found the 1 hour was a bit choppy and I could just hold on for longer periods of time. So I'm kind of glad that I used the 1 hour, and just this, I was up here where I changed from 1 hour to, oh, look at this. That was a terrible trade. I don't know why I took that. I think that was kind of like a re-entry or something like that. But this is where I discovered it. I've actually posted this particular strategy or charts for this strategy on my Twitter when I was giving buy and sell calls. But I gather if I just give you the tools, you can see this for yourself rather than wait for me to post it on Twitter, essentially. But yes, you can see here we had a breakout and a retest of this trend line. That was one of the reasons why I got into this. It's kind of like I got the buy signal. I got in on the touch of the trend line and then rode this up to a Fibonacci line, which I would say is probably the 618. Yep, there it is, 618. And then waited for the rebuy here. Anyway, this was not part of the strategy, so I'm not really going to cover this. I'm just going to go from here forward because that's where I changed it to the 2 hour, and it's been pretty good ever since. So that's pretty much it. The last thing I'll cover just quickly before I wrap this video up is the alerts. So a very simple way to change these alerts is you can either click on the flag of the buy or the sell, click add alert, once per bar close, and then you select one of the buys and one of the sells essentially separately, and just type in something like BB buy 2H sol or something like that, essentially. Once per bar closed, because you want the alert when the bar's closed. It gives you plenty of time to organize your trade, so don't worry about getting in immediately. It's not really a big deal. You have plenty of time to wait for that retest of the moving average. And that's the alert there. And it's up to you whether you want to use the EMAs or the TMA overlay. I actually much prefer the TMA overlay because it seems to actually give better entries. So I'm actually going to get rid of this triple EMA forecast because it just cleans things up. I do have an RSI on here as well, and the RSI I used for working out divergences, and those were particularly what I was using for profit points. So for example, we had, this short here, and I saw that there was bullish divergence on the RSI. That's why I've drawn a line in there and put bull div, and so I was a bit more aggressive with my profit taking there, for example. Again, bullish divergence, aggressive with profit taking, especially after this 3-line strike, so on and so forth. So that's another thing to look out for, is looking for divergences and taking profit on those two. So that's the strategy. Hopefully this gave you some value. If it did, please leave a like, comment down below, subscribe to the channel, hit the notification bell, and feel free to share this with anyone that you think it may help. Overall, as you can see with backtesting, the strategy has a pretty good success rate. So it's one of those things where if you just stick to it mechanically, it will hopefully work out for you in the long run. So again, using Fibonacci's as profit points, moving averages as profit points, and trend lines as profit points will help you sort of scale out of your trade. So if it does flip around on you, you've already taken some profit off the table, which means your break even is far away from price, which is kind of the scaling out of positions and taking small amounts of profit off the table. You can take out quarters, or you can take out just small percentages. Like say if you have a 100 sol position, you just take out 10 sol along the way, or 20 sol, 20 sol, 20 sol, 20 sol, like so to speak, and finding things like 3-line strikes in the opposite direction, stuff like that, all helps scale yourself out of these positions. Like for example, the 200 period moving average this morning, I've actually taken half of this trade. So it's up to you how you want to scale out. It all depends on your risk tolerance and management, essentially. But sometimes just leaving the whole trade run can be really, really good, and other times it's not that great. So that's why I like to scale out. So anyway, I hope you liked the video. Peace out, all the best. Have a good one.